Active Trader Pro. Of course, this week we're going to be talking about our options trading tools. So if you came to learn about our options tools, you came to the right place, even if you haven't been joining us for weeks 1, 2, and 3. I have a lot of clients that I work with that are primarily interested in options trading. They have some familiarity with Active Trader Pro. That I encourage them to take this particular week because we dive into things like the option chain. We dive into things like our profit and loss and probability calculator and option statistics and such. There's so many great tools that we will talk about today. That being said, if you want to catch a little bit of a repeat of our classes, there is a place that we have these classes posted online. You do have to dig into it a little bit. We'll show that back at the end of the session we have so far for today. So I strongly want to encourage everyone to send in your questions, send your comments to Troy and myself, so that we can, address what you want to learn about. If you want us to spend more time on the, today's biggest trades tool, well, we can. Well, if you don't want us to, and you want us to focus on, some other tools, well, we can kind of shift around what we talk about with that. So that said, please, please, please send in your questions, send your comments. We greatly appreciate that. Alan, we can step you through some of that. I know you asked about setting up stop loss orders for options trading, and I know generally with options, there's no substitute to simply monitoring your account. And I've worked with a lot of traders, of course, that will utilize stop loss orders. Take a trip, go on a cruise, be gone for a week. Options trading, there's no substitute for closely monitoring your account, and that's a little bit of the trade-off. You get, they are more complex than stock, but we can kind of provide a little bit of tips and tricks back at the end of the session that we have today. That said, though, welcome everyone, and why don't we go ahead and jump into the content we have. We're going to start everyone off with, we're going to do a quick review of last week in the form of the homework assignment. Now, as we've mentioned in the past, we're not going to call your parents if you haven't done the homework. This is just different people learn different ways, and some people learn better if they have a little bit of a worksheet to go through. That said, Troy, why don't you kind of step us through last week's homework assignment?
Yeah, good afternoon, Nick. Good afternoon, everyone. Thanks so much for joining us for week 4 of our Active Trader Pro class. We're going to be talking about the option tools today. So excited to be here, excited to get right into it. For those who are joining us for the first time, just a reminder, depending on how you signed up or how you registered for this class, you can find our content if you go to News and Research down to where it says Learn. Once you're there, on the left-hand side, you'll see this little icon that says events here. Just keep in mind, in addition to classes like this that we host every single month. So even though you might see, hey, it's being recorded, it's recorded not for distribution. It's going to be recorded for compliance purposes and for quality assurance. If you missed some of the other classes or weren't able to attend, feel free to register for those next month if you have the time. And in addition to the classes, we do host a number of rotating coaching classes. We talk about a plethora of topics, and we will also do different sessions based on different experience and difficulty levels, if you will. We also do have those daily market briefings. So just a reminder that we do lots of different stuff here for you. We want to make sure you get the most value out of your experience here at Fidelity. So in the classroom page, you can go to fidelity.com/classrooms. That's another shortcut. We're in the Active Trader Pro class. So if you go to learn more and register, you'll see the class. You have to do it one more time, and you'll see the different week by week breakdown. Today, again, we're in week 4, the trading and analyzing options. So we're just going to review the homework for week 3. We talked about some of those advanced charting capabilities. Another big reason in terms of why a client or why somebody might want to use Active Trader Pro. So let's jump right into it. If we open the homework, there was a couple different things, basically just reviewing some simple navigational aspects that we reviewed again last week. So if you're doing the homework for this class, maybe you have a separate layout, you don't necessarily have to do that. But the call of the homework was to open up a new chart tool, and we're going to look at a 5-year chart of some ticker symbol of your choosing. I'm going to use, for illustrative purposes, Amazon, no rhyme or reason. We need to change the chart type to standard candlestick. Some of us might use the regular filled, but standard is just another type of candlestick we can use. Let's draw support and resistance line, add two moving averages, compare it to the S&P. And then if we want to save it, we don't necessarily have to, but if you want to access it later, we can save it. We can name it homework if you want. So if we go to Active Trader Pro, I went ahead and I'll go ahead and segue here to my Active Trader Pro. Hopefully everybody can see it now. There we go. And I went ahead, did everything for us just to save us a little bit of time. Using, again, just for illustrative purposes, Amazon, we're looking at 5 years. We're looking at a weekly frequency. So it's not a daily chart. Each candlestick represents a week of trading. Open, high, low, close. We go to our settings. And in our settings, it asked us to use the standard candlestick. The filled is typically what you'll see. That's solid green, the solid red. All the standard does is it hollows out the up candles. So you'll see the green candles now are hollow. They still have the green outline. We could change the colors if we want. And the down candles are now red, and they're also filled in. We were supposed to draw support and resistance line. This was a little tricky because Amazon's right near all-time highs. So in terms of drawing a support, well, it's in our uncharted territory, so to speak. So perhaps we want to just say it recently broke out of this range. Perhaps we want to say this used to be support, or I'm sorry, resistance. Now, perhaps we want to say it's going to be support now. So I would say the most recent before it broke out of this range, here was resistance, here was support. And we were supposed to add two different moving averages. It didn't tell us what values to use. The 20 is going to be your default when you add a simple moving average. All we had to do was go to our indicators. You can type in simple, you could type in moving average, you could type in SMA. In terms of simple moving average, you also could just kind of hover over and navigate to where it is. You would have had to click here. It is organized alphabetically. So you would see right here, simple moving average in terms of finding it in the list here. We added two of them. I changed the second one to 50. You could use 100, 200 in terms of just whatever you find useful. And then the next thing we had to do was compare it to the S&P. Just hit compare. We could do dual axis or not. We don't have to do that. The homework didn't specify. So that's really all we were supposed to do. You can see Amazon for a little while was underperforming the S&P. You can see as of recently, it's been outperforming the S&P in terms of its 5-year total return or price return, you should say, I guess we should say. And again, support resistance, you could draw it manually. There's also a tool here provided by a third party that if you click here, it's going to use some algorithms to do it for us. Now, it might be different, it might be similar. In this case, actually, it was pretty similar to where I drew those lines. So the blue line here is the algorithm. The thicker green line is where the algorithm drew it. They're in the same neighborhood, I would say. So hopefully that makes sense. And that was basically all we had to do for the homework. Nick, feel free if anyone had any questions. Hopefully that was pretty straightforward in terms of, again, standard candlesticks, 5 years, weekly frequency, add two moving averages compared to the S&P. And the last thing we should do if we want to save our charts, again, as a really great reminder, there's two things we always have to save in Active Trader Pro. We have to save our charts and we have to save our layouts. So if you wanted to save, there's that floppy disk icon right here. Go down to save, name it whatever you'd like, and then you can select if you want it to be your default chart or not. Make sure all these are checked unless you don't want to save certain aspects. If you don't want to save the indicators or you don't want to save the drawings, I think in a lot of cases, people probably do. So again, typically you want to check just about everything, maybe not the top one in terms of making it your default chart. You might have a separate chart that you want to be your default chart. And then just hit save. I'm going to hit cancel here so we don't save. But again, that does it. Nick, I'll pass it over to you if you want to get us started in terms of looking at some of the option tools today. I know that's also a big reason going back to the why a lot of clients want to use Active Trader Pro.
Absolutely, absolutely. And while I talk with a lot of clients, and I mentioned this beforehand at the very beginning of our classroom, that I work with clients who've traded 5,000, 10,000 times a year and just use the website. And I work with traders that trade maybe a couple hundred times a year and only use AccuTrader Pro. Some of the difference comes to be, are they trading options? They're trading stocks. There's aren't really any traders that I've worked with in a long time that trade 1,000 times a year and trade options 1,000 times a year and don't use AccuTrader Pro at all. Just because there's so many really powerful option tools within AccuTrader Pro, it's really a very useful platform. That said, I know our website has been making leaps and bounds with improvements in the option chain and the trade ability for option traders that don't use AccuTrader Pro. And I work real closely with that particular team, but to kick off where you can actually grab the option chain with an AccuTrader Pro. So there's options at the very top, option chain. And I get asked, quite often, Nicholas, wait, what's the most important option tool in AccuTrader Pro? And I would say unequivocally the option chain. It's the most important, the most powerful trading tool for option traders that Fidelity has, the option chain. It's so, 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 so important. Shifting back over, let's take a look at, maybe look at NVIDIA. One of the top 3 securities in the S&P 500, been in the news a lot. It did break into, be that #1 security for a day before dropping back down. If anybody has a different example of security they'd like for us to use, please let us know. We're happy to shift over with that. And unfortunately, Camilo, while I do speak Spanish, we do have to have today's presentation in English as opposed to Spanish. But I'm sure that there might be some fast translation services. Unfortunately, I don't know any plugins we have that might offer that. The continuing on with NVIDIA, this is the option chain. Very top left, you're going to have a kind of a quick quote, real-time quote that's going to be changing, showing the uptick, the downtick, last trade, and percent up and down. You're then going to have some volume information and some volatility information right up here. This isn't going to have historic volatility, how much the stock has actually moved in the past, and implied how much option traders expect it to move in the future, and provided by one of our data providers. And then you're going to have a call to put ratio. A lot of traders will get focused on some of this call to put ratio and go, well, how will this tell me whether I should buy or sell the security? And it doesn't necessarily. This simply shows that in general, a lot of traders feel that if more calls are being traded in puts, that's a bullish sign. If more puts are being traded in calls, that's a bearish sign. But many of those same traders also feel that if this gets too strong, if it's a 2-to-1 ratio, that's a little bit of a counter signal, and that might then show too much weakness. You think about it like odd lot trading. You start to see a lot of those odd lots versus the round lots. A lot of old school traders look at it and go, this is the end, when you see a bunch of those odd lots being traded like that. Next, of course, we have calls and puts. If we just want to look at calls, just want to look at puts, we can do that. We can change this to look at things like spreads, straddles, and such. But as you gain skill, as you gain knowledge, me personally, as opposed to looking at this through the lens of a spread on here, I'll simply look at all the calls or all the puts, and I can then visually do the math between the different strikes that I want to see. And it makes it a little bit easier for if I want to go $1 wide versus $2 versus $5, I'm having to change all the settings. I can very, very, very quickly see that. But there are some interesting things like a straddle. Quickly doing the math for you of adding the at-the-money call and the at-the-money put to get some of that straddle pricing. It's going to make things very, very easy for you. So we'll leave this on calls and puts and such. But I'm going to come down here, and I haven't selected a strike, a expiration date yet. All these with the W's mean weeklies. So the June 28th expiring tomorrow is a weekly. June 5th is a weekly, et cetera, et cetera. This July is a monthly. August is a monthly. September, October, those are monthlies. And that's what this means right here. If we click on this, it's going to hide all the weeklies and just show us the monthlies. And then those longer term, the leap contracts and such. We click on this will then show it to us again. Now, NVIDIA is not so bad, but if we shift over to, let's say, SPY, Well, SPY has dailies on this. So we have every single day. And if we want the monthly, we had to go way out here to July. What about the August? It could be problematic without being able to click on the W to just show us the um, the ones that we want, so to speak. So shifting back over, part of why I pulled up particular expiration date is if you notice we have 19, so 119 through 128, because we've told it to show us 10 strikes. I've worked with a lot of traders that see this and go, well, I really would have sold like a 130 strike call, but they only had up to 128, so I sold the 128. Well, they potentially do have those. You just have to come here, go strikes, 20 strikes, and now this will show you the 20 closest strikes to make it the money versus the 10 closest strikes. It does happen with surprising frequency on that. I'll show traders and go, oh, I didn't realize that. Likewise, you can also go all strikes, or if you're just looking at out money calls, we can go, 125 to 140. And then we only see the above the money options here versus both sides of the trade. Many traders, though, they'll just leave it on this 10 by default. That way, if they're seeing multiple dates over here, it doesn't start to get crowded out with that. Now, after these all strikes, we see all volume and open interest. If you're wanting to kind of highlight particular contracts that have, let's say at least a open interest of 1,000. We can do that like this. And if you noticed, a couple of these wouldn't got grayed out. Well, if we say open interest above, or we'll even change this and have it say volume today of 1,000. Kind of draw your attention to those that only have that particular volume. Now, something else, we always get asked about what these blue things mean. And this is a little bit of a histogram and such. So it's going to completely fill up where we have the most volume. And then if you look, 3,500 contracts, 4,000 contracts is about a quarter of this 13,000 contracts. So we get about a quarter of the bar filled up. Likewise, 91,000 is the most. 58,000 is about 2/3. So that bar is going to be about 2/3 of that. So it really draws our attention very, very quickly to where most of the volume and open interest is on the chart. If you don't like that, you can click this to hide the volume open interest histograms and it's gone. It's a really neat visual. There's also adjusted contracts for securities that have gone through splits, spinoffs, mergers, etc. Generally though, the security is going through like a 2-for-1 or a 4-for-1 or a 10-for-1 type split. Things are easily adjusted and you don't have an adjusted option contract. But when it becomes more complex, like there's a spinoff, or now you have an option contract that covers some of these shares and some of those shares, those can be adjusted contracts. So, but be mindful trading those, but they will be marked as adjusted. Shifting down here, I already kind of talked about these different dates. Now, one thing I'd recommend as a little bit of a tip and trick from somebody that's been using this for a long time is if you come up here to settings and then option chain. One thing that we do is we change this to show no expirations by default because the default is to show 3 months. Why might this be a problem? Well, because let's go back up to options, option chain. Let's say you wanted to trade the July 19th monthly SPY contract. So come to SPY, pull this up. Other than taking a bit of time to load, you notice all of these dates are selected. And this will load up momentarily and either have to scroll with your mouse wheel down to finally find the date, 4 days, 5 days, 6 days, 8 days that you want, or you have to go unclick, 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 deselecting all the ones that you don't want. So instead, I found it easier, and many traders I've worked with have found it easier to come to settings, come to option chain, and say, don't show any expirations by default, hit apply. That way you get that blank chain and then it only pulls up the strikes that you want. Daniel, adjusted options or options that have been adjusted due to splits, spinoffs, mergers, etc. So I know a couple oil companies kind of did little split offs like that. That what would then happen is, an option that you had before the split or the spinoff then has a deliverable still of both companies that spun off, and so it then becomes adjusted. So it can be a little more complex. A lot of options, if you have a 4-for-1, well, if it's a 400 strike, you then have 4 100 strikes. But sometimes if it's messy, if it's a 5-for-1 or 3-for-1, some of them they stay the same, but then as opposed to delivering 100 shares, you deliver 400 shares or 500 shares. The deliverable goes up and things adjust and such. And so they could be complex with that, especially reverse mergers where it's it's a 1-for-20 or something that could impact things. You have spinoffs, you have acquisitions and such, where one company either acquires another company or gets split off. That can be problematic and such. Kind of continuing on though, all of these fields are highly customizable. Such, if you have time value up here, if you don't want time value, right click, remove column, poof, gone off of your option chain. Well, we have delta theta. Well, what about wanted to see gamma? We'll right click, add column. We can come down here. We can add gamma. We have change percent. We can move this over here. So it's right next to last. Or even we can remove that if we want. And we can put back on, maybe other things that we might so desire. Let's add change instead of change percent on here so we can see what that dollar value change is versus the percent value change. You can also double click. I double clicked. These columns get narrower. You can also stretch them out. If you want to make them as wide or as narrow as you want, they have a lot of the similar features that you might see in the program like Excel. You can also stack rank these by price. So I'm going to reverse sort this real quick. And now it's high to low versus low to high. And you can do that by volume, by implied volatility, by change, by any of these other columns. You can do that. And these columns all drag around. Now, changes you make to the left side happen automatically to the right side for calls and puts. And if there's a lot of changes you want to make in a short period of time, if you come here to options chain, in the settings, you can then make those changes all at once, reorder columns, add columns, remove columns, etc., etc. Make it real quick and real easy to do that. That said, Troy, anything that you might want to add to the option chain, or maybe introduce to everyone a little bit some of the mechanics of trading the option chain?
Yeah, absolutely, Nick. So again, you kind of took the words right out of my mouth. So the option chain, in addition to just showing a lot of different option data and giving us, again, within the prism of the real-time display, right? We see trades, we see bids and offers changing second by second. That's among the reasons why we use Active Trader Pro. If you've traded multi-leg options in Fidelity.com, you can still opt into real time, but it's not going to update with that type of frequency. So, again, there's multiple ways to trade once you have the layout you like. And again, we're just illustrating, we're not, suggesting any trades by any means. But again, if you were to do a multi-leg order, you'll notice here there's a little button at the top that says trade and chain. If you have this off, this is going to go back to what we talked about in week 2 when we talked about different types of order tickets. So I'm going to click this on for a moment. And what this is going to do is, let's say I'm doing a call spread. I'm going to buy I'm going out the next month's expiration in July. Maybe I want to buy the 545 call and sell the 550. What it's going to do, and again, I could go to my settings. I didn't actually specify having a specific account. So it's asking me, wait a second, before we put anything there, what account are you trading in? And that could be a good mechanic that you want. If you want to skip this step, if you go into your settings, you could set if you have only one account like we do, this is a test account, you could say make this the default account because it's the only account. But we're going to say individual account. We're going to buy the 545. We're now going to sell maybe the 550 and do a 5-point spread. So you can see here we get a net bid, a net ask. We can evaluate the spread. We could change our net debit or credit depending on the type of spread we are trading. Here's another way that we could do a trade like that. That was very easy. We could hit preview and send, and just like that, enter an order. Again, we want to make sure we did our due diligence. We don't want to sling orders willy-nilly here. But what we could also do is, let's say, and this isn't trading in chain, this is more of not trading in chain. You'll see there's these little hamburger icons whenever you hover over an option. If you're interested in a specific option, you could always pull up a quote to kind of see how that option trades throughout the day. You can also, there's a little menu here that says trade strategy. Well, instead of doing it within the chain, I could do spread right here. And this is slower, but some people may want to trade this way. You have to specify, okay, I wanted to do a strategy like a spread with this 545. Well, spread usually means at least two legs. What's your other leg? So then you just have to specify, okay, well, I was trading in the same expiration. I want to maybe sell the 550 strike call. Same information here in terms of the net bid, net ask. It has some additional information here. It does give you, if you're doing a defined risk strategy, it's going to give you your max gain, your max loss. I believe it excludes commissions, 65 cents per contract per trade. So you want to just mentally, include that there. What is nice, I do like this mechanic here, Nick, when I'm trading options or when I'm trading spreads. If you want to try to get a pretty good fill on some type of a spread, you can see here, hey, our net debit is within the midpoint and the offer. We're probably going to have a higher likelihood of getting filled if we enter within that area. If we're being a little too stingy and we're saying, no, I only want to pay 282, well, I'm trying to buy and I'm on the left side of the midpoint. It's going to be a little tougher for me to get filled unless the market moves in that direction. So that's a nice little visual. Again, the data is the same. It's just that visual telling you how competitive is your bid in terms of doing a net debit or net credit order. So again, it's just a visualization tool. So for anyone who does want to do, multi-leg or use the multi-leg option train, you would want that to be your default, and then you'd want the trade in chain feature to be selected off. But I'm going to say keeping it on, again, is a really quick and easy way of doing option trades. All you have to do is you can see again the live bid-ask pricing. We have, our volume, open interest, all those other features that you already talked about, Nick. And so again, this is going to be one of those bread and butter tools in terms of option trading within Active Trader Pro. Let's make sure we have enough time for some of these other tools. I'm going to skip around a little bit. I'm not going to cover too much on the option filters tool. Perhaps you've used the filters tool. It's a great way to kind of do some reconnaissance on the market. Typically, you'll see, for example, in a lot of our market briefings, I'll use the markets tab and look at, some of the most active names across the markets or on certain indices. I might look at gainers or losers on the day. There is an options tab. Be a little cautious. There has been some tool shuffling in terms of some of these tools. So some of these tools might be changed or updated in the future. I don't have any specific knowledge of when and to kind of what extent, but there is some interesting tools here. You can see, okay, show me some high call volume or high put volume, or maybe I want to see underlying issues with high open interest or with sudden changes in their 30-day implied volatility. It can just be good just to see what's going on, but it's just a calculator. It's just giving you the data. You have to kind of interpret it and tell yourself, okay, well, if I'm seeing some implied volatility that's exploding, there's probably a reason why it's exploding. So it should give you information that begs you to seek more information. It's not going to say, buy this option, sell this option necessarily. It's just giving you more information. Nick, any thoughts on the filters tool? I know it's it can be a useful tool in terms of just seeing what's going on out there.
Absolutely. We do have a lot of kind of advanced classes that start to cover on the filters tool. But keep in mind garbage in, garbage out. For some things, when it has, for example, high option volume, well, it's going to be high option volume relative to average. And you might have something that's at 1,000% option volume, which means it has 10 times more volume than normal. It could have then traded 2,000 contracts today versus the 200 contracts that it normally trades. Compare that to SPY, which trades on average of 7 million contracts per day. So some of this is a little bit garbage in, garbage out. There's some additional filters that I encourage traders to use when they look at this. But might have something that's having a lot of volume because, well, it's an earnings announcement. Of course, there's going to be a lot of volume the day before, the day after earnings, et cetera, et cetera. There might be something that's driving that particular volume. And it's exactly like Troy mentioned. It could simply be hey, let's do more digging on this. Maybe there's something to trade here because, other traders are looking at this. Now, that said, it's kind of very similar to another tool I want to talk about. We're just going to come here to option statistics. And then this set of tools is really what we're going to spend the rest of the session on. The statistics, the biggest trades, probability to calculate profit loss, and then strategy ideas tool with that. Now I just kind of full screen this, and we can keep this at NVIDIA. What this shows is some simple trade breakdown information that NVIDIA has. And the most important information on this particular tool is this right here at the very top, this volatility information. A lot of traders get caught up on this down here and go, I found the holy grail, Nicholas. Tell me how to interpret this to tell me which way the stock is going to go. And unfortunately, their data isn't there, so to speak. There isn't a magical formula with that. This is just being descriptive of what's going on with the options market, with trading volume in general. But the most important information is this right at the top, this implied volatility information. This will show you IV30, 60, and 90, which is the volatility implied by options for the next 30, 60, and 90 days. Then you have the historic volatility, the actual volatility the stocks actually had over the last 10, 20, 30, and 60 trading days. In addition, you see a breakdown of where implied and historic volatility have been in the past and such. We get a 52-week range. The implied volatility on NVIDIA has been as low as almost 31 and as high as 67. And right now it's about the 50th percentile. And if you mouse over this, you're going to see IV30 where it's at. And you're going to see a percentile number. And it's at 51 percentile with that. This is a little more percentile, kind of like, a testing percentile. I think of this, a lot of other brokers will call this IV rank. And what Fidelity is calling IV percentile actually is IV rank. There are some small differences there between a true IV percentile and an IV rank, but for those that are looking for IV rank / percentile, this is where you can find it right here. And it's simply doing the math of that. If this ranged from 20 to 30, it was at 25, right in the middle, well, this would show the 50th percentile. Is it 27 and a half? 3/4 up would show the 75th percentile. Is it 29? And between 20 and 30, it show the 90th percentile. Everything over 30 is 100. Everything below 20 is 0. And it then would reset that new lower, new higher high the next day. Beyond that, down here we have trade volume. Now you can see, a security that's 1,000%, 10,000% average volume, but only having 20,000 contracts a day. It's a drop in the bucket compared to the regular 90-day average volume that NVIDIA has. of 1.6 million shares, a million contracts. Now, I get asked a lot on, why might this be important? How can we use this? How can we interpret this? And for me, this comes back to options liquidity. I'm just going to go alphabetically A, B, C to kind of demonstrate this. We'll go security A. Security A, 611 contracts a day. Probably not as liquid as NVIDIA. What about security B? 8 contracts a day. Actually has a lot of volume today. I've seen this a couple of times where it's only at 1 average contract for the last 90 days or even 0 because nobody really trades this one. What about security C? Well, 132,000 contracts a day. This is more, more tradable, so to speak. And what might we then expect to see if we pull up the option chain for these? Well, we would expect security A to have more liquidity than security B, but less liquidity than security C. And so let's take a look at that, the option chain. Security A. Immediately, what jumps out to you? What jumps out to me is that there's no W for weekly. We don't have weekly options here. There's not enough demand to warrant weekly options. We just have the monthlies. Take a look at this pricing. 175 by 185. Not a bad spread. Could be better. 10 cents wide, but this is also trading in nickel increments. It's not part of the penny pilot program because there's just not a lot of volume. So, with security like this, that you're interested in trading options on it, this might be a maybe, but just remember that while you can place a limit order to get in, if you're then having to get out quickly, you'd be at the mercy of the market. So we'd naturally expect less liquidity from security B that has even less volume. So let's look at security B. Security B about $40 a share. Notice it also doesn't have weeklies, but it doesn't even have these leap contracts anymore. The January, etc. contracts. Look how wide this spread is, 215 by 285. The other security had a 10-cent wide spread on an $8 security and such. Even the 175 by 185 was 10 cents wide, but look at this. This is 70 cents wide on here. I've pulled up this security and I've seen it trading at 0 by like $4 to have a bust through those spreads. These really isn't very liquid on this. And if I was working with a trader that was looking to trade this security, looking to trade options in this security only, I would probably encourage them to find a different security that the options might be more liquid on. Now, stocks, another perspective. Now, this has 200,000 share volume so far today, which is pretty respectable. Bid and ask spread might be reasonable. Now, let's compare this to security C. Also at now $60. Wasn't that long ago, this was about 40, just like security B was. But look at these spreads. 1 to 2 penny wide spreads on here. Right now it's 2 pennies wide. Normally I'll see this at 1 penny wide. Penny increments on here, not nickel increments. And we have the W for weeklies. We have weekly options on this as well. There's a lot more demand. A lot more people trade these options. So that to me becomes an important aspect of this tool is you're looking at that average volume to see, you can visually go, okay, there's enough average volume. This is going to be a liquid option. Filters tool will kind of do that as well. And you can just filter out everything that has less than a specific amount of average volume. But getting to some of these other things, sold on bid, bought on ask, the deltas, the gammas, the net premiums and such. It's less useful information. It's interesting, but less useful information. So what the net deltas are going to do is for calls, if a call is purchased and it's determined to be purchased if it's bought from the ask, sold to the bid, it's assumed to be sold. So if a call is bought, that's positive delta. Call is sold, that's negative delta. And so by this being negative, this is saying that even though we have C sold on the bid, bought on the offer, likely if these all had the same delta, well, because more have been sold to the bid, you can expect to have a negative delta here. The same thing with more puts are being sold to the bid versus bought, you can expect to see more positive delta with the put side. And then premiums then have a factor whether you're paying the premium or receiving the premium. And sometimes we see these to be a little bit wonky where we might see positive premium and positive delta on the call side, which can get a little bit wonky with that, and so on. So I'm going to right click here. I'm going to go to help. And the reason why I'm doing this is if you ever aren't sure what any of these fields mean, the help tool will help. It'll answer those questions. Under option statistics, this will actually give you a line-by-line description and definition on all of these lines here, what it means to be sold on the bid, what it means to be bought on the ask, what the net premium and net deltas mean, etc. So if you don't remember, you can always come to the help tool to figure that out. Now, this kind of plays into the today's biggest trades tool and such. Any of these trades that occurred at or above the ask is going to be green. Any that occurred at or below the bid is going to be in red. And so, traders, they typically will assume, well, if it traded at the ask, the party that was more interested in getting this trade done bought it from the ask. The other trader was like, hey, I want my price, had their limit order up. They're less interested, so it's bought from the offer, sold to the bid, and such. And it might not really take as much as you might think to put you on this list. And this is Citigroup, of course. 3,800 contracts. This top one on this list at 19 cents a contract. Well, that's only $72,000 worth of options to traded hands. This next one, well, this occurred between the bid and the ask. We don't know whether somebody bought or sold this. We can't make any assumptions. This is even half this, and so this is only $30,000 worth of contracts traded hands right here. So, for $10,000, $15,000, you too could be the number one or one of the top, biggest trades on a security in any given day. Even looking at NVIDIA on here. Now, some of these we have, these will show multi-leg orders, etc. on this. And so this could get a little bit more complex when you're starting to piece together multiple trades. And so some of this we see occurred at the same time. We don't know whether this is, what's been lining up here. We can make some assumptions that, well, this put could have been bought because it's green versus sold. But because this happened at once, well, maybe the market maker took a little bit less on one trade to fill that at that side. So we don't really know. Was this a straddle where both these were bought? Was this a short synthetic where the call was sold and the put was bought? Or was this the flip side where the call was bought and the put was sold, but because this is so tight, this filled at the ask compared to this right here. Now, we can make some assumptions that we see 2620 that occurred closer to the bid versus the ask, and so a trader might assume that that call was sold and that put was bought, but you don't know. On top of that, you might look at this and go, man, that person has to be really, really bearish, because if they sold the call and bought that put, it's 20,000 contracts. That's in essence 2 million shares of stock they just went synthetically short. They have to be really bearish. But what if they had 2 million shares of stock they were long in their account and they're just kind of hedging off their exposure? They wanted to flatten their position for 6 weeks, waiting for more news and events to come out, and then have these come off, be left with their long position. These buys and sells down here, somebody bought this put. Are they buying the put because they're bearish? Are they buying the put to protect their position? Or did they sell some puts for income and they're buying them back to close? We don't know. And so because of that, because we only see half of the trade, we know if they're we don't know if they're legging into a spread, if they're opening, if they're closing, what their stock position looks like. This just becomes interesting information versus trade critical information. Because even something as big as this, 20,000 contracts. It's a lot of contracts on here. Well, at a buck 36, well, 20,000 contracts would be quite a bit of money, but it's only, $2.7 million. It's not billions of dollars. And so, a lot of traders will see something like this and go, oh, man, this has to be a huge hedge fund. This could be a regular individual investor that just has a little bit of a bigger pocketbook. Think about that. Even if we shift over and we look at some things like, I know I've seen a bunch happen on Apple where it could very, very easily have just been an individual investor. This right here, this jumps out to me. 16 cents times, 1,850 contracts. It's less than $30,000 worth of options right there. And it's, the top 10 on Apple and so on with that. All right. With that said, there's so much we can talk about. I know we only have about 15 minutes left in the session, and might seem like we might have a whirlwind session. The rest of these tools. For those that really want to learn more about the option statistics, the today's biggest trades tool. We do have a dedicated half-hour session coming up in June that we'll be spending even more time on these particular tools. Same thing with our probability calculator and profit loss calculator. We have a dedicated hour-long session on just those tools and such. And so I know we're going fast, but we want to cover everything. That said, Troy, anything you might want to add to the option statistics tool or the today's biggest trades tool before we move on to the probability calculator?
I think you really touched on it, Nick, is that, there's information, I would say with the stats info, that top portion in terms of the IV 60, 90, if you hover over it, the 52-week range, percentile, rank, whatever you want to call it, I think that's going to be really the most helpful information, telling us, we might say how much juice is in the options, right? How expensive are those premiums? Keeping in mind that just because it's high, it can still go higher. And just because it's low, it can still go lower. There tends to be a cyclicality to it, so that is of interest to option traders. We can do things like reversion to the mean and take positions on Vega or exploit it as part of, maybe some type of strategy in addition to whatever our price outlook is. But again, let's talk about some of these other tools. I'm going to go over to, with the time that we have, I'm going to go over to that probability calculator. So all I'm doing here is just shifting over to the next tab. You see we have the stats, today's biggest trades, and then we have the probability calculator, profit loss calculator, and strategy ideas. And because we got less than 15 minutes, again, folks, like Nick says, we have dedicated sessions where we will dive more into each of these tools if you're interested in getting a more in-depth view in terms of, again, using these tools. But with the probability calculator, I would say this is really a kind of a gut check type of a tool, right? If maybe you're planning a stock trade, maybe you're doing an option spread, this is going to be a tool it's basically using some assumptions. It is a calculator. It's not AI. It's not a predictor. And all it's basically doing is it's using historical, key phrase there, historical volatility, not implied volatility, historical volatility. Volatility can be used and can be calculated via a standard deviation. You can use variance. So it's using that and it's plotting that and taking that variance or standard deviation and then projecting it forward. And then the idea is if you plug in, okay, this price by this date or above this value but below this value, it's going to give us hypothetical percentages using the assumption of how volatile that stock has been in the past. Again, it's not a holy grail. And we know that just because a stock has been certain type of volatile in the past doesn't mean it's going to necessarily keep that same volatility moving forward. But let's use an example here. Let's get a little bit more specific. Let's say, all right, Microsoft here, just for illustrative purposes, it's trading 453 by 0.85, let's say. What are the odds that it's above 440, but maybe it's below, let's say, 460? I'm going to type in just certain values here. And let's say we want to do this by, how about next Friday? So a week from tomorrow. So what we can do, we plugged in different dates here, and then it's going to say, do you want to use the last 90 days of implied volatility in terms of what we're going to project forward? Do you maybe want to use the last 30 days, the last
of
60 days?
of historic volatility versus implied um, on that. And one other thing I might want to add onto this that I like to do is this does by default show three different standard deviation bands. So it shows a darker band for one, lighter for two, even lighter for three. Most traders, most option traders, the anything over two is meaningless on that because there's no premiums with that. And so most option traders, they'll drop this down to at least two if they don't drop it to one on this. And you see that it did stretch out price on the left, but really what it did is it got rid of the outer band, just left the next one, and then adjusted the y-axis to stretch the y-axis out on that. So I just thought to add that in there, Troy, just to make it easier for everyone in the audience to see your lines that you've drawn since everything's now stretched out on the y-axis.
Absolutely, yeah. I mean, we can edit this a lot of different ways. We can say, show me 1 month of historical data. We can stretch it out for 3 months. So it's kind of, squeezing or expanding the y-axis or the x-axis. And like you said, showing three standard deviations might be a little bit meaningless. Anybody who's taken a stats class will look at these percentages and say, okay, I don't really need to see that. Maybe one standard deviation is enough. Maybe I want to see two. So again, to each his own. Now, again, you type in a certain price, a range, a date, and again, maybe the stock has been very volatile within a very short period of time, perhaps due to an earnings. So you can smooth that out by including more historical data, or maybe there's an older, more volatile event that happened in the further past that maybe you want to take out. So you might want to shorten and say, I think the last 60 days is more kind of a typical volatility type of thing to expect. So you could use that. You'll notice here for Microsoft, all these values we've been typing in are pretty similar. So, you can always just click the blue reset button to go back to your default, or you could just use 90. You can also, if you're somebody who has a specific value in mind, maybe you want to plug in a certain value based on certain assumptions. But again, we can look and see, okay, between 440 and 460, it's about a 54%. So if I'm doing some type of a strategy, that's basically telling you got a close to 50-50 shot if you're looking at the stock going to be between the 440, 460 range. And you have, in terms of above 460, it's about a 1/3, right, type of probability. And then below 440, it drops quite a bit lower. So again, you're going to use that in your trading process that, hey, if I'm making some type of a bet that it's going to be above 460 by a certain time in the future, you better have a good payout lined up because your probability is pretty low that that's going to happen. Whereas, okay, if I'm between 440 and 460, I got about a 50-50 shot, still want a decent payout, still want to have a plan to manage risk, but that kind of tells you ahead of time, you got about a coin flip chance in terms of being successful. So again, it's not meant as a predictive tool, just as like really a gut check in terms of saying, am I doing a trade that is really super low probability or super high probability? And that's just one method. You can also look at an option chain. You could look at strikes and look at delta and make some assumptions there. So there's a lot of different ways we can do this, but probability calculators are pretty popular. The next tool that I think is probably the most popular, or I would say one of the most useful, arguably, tools within Active Trader Pro is this profit loss calculator. And Nick, if we have some time, maybe we could look at the strategy ideas tab as well. Again, if we have time. For Microsoft, you can see there's nothing here. So I haven't evaluated or typed in any options yet. If we have positions, it would show us here on the bottom. So let's add a simulated position. That's what this tool is basically going to do. It's going to help us to simulate the risk reward profile of hypothetical option trades. We can also use this to review trades that we already have open. Again, I'm just going to plug in some random, values here. Again, just for illustrative purposes, not meant to be a recommendation by any means. But if we look at next month, and let's look at the money strike call. So if we're looking at it's trading at about 433, okay, maybe we're going to use let's go slightly out of the money, look at the 455 strike call, currently trading by 760 by 775. Oh, maybe we could buy it. Maybe we could type in 770. Maybe we could get a fill there. Maybe we want to just use the ask price, whatever our thought is there in terms of what price we could get. So if we were able to type in a trade and get it for this price, we can type in and take a look at, okay, what would it look like based on certain types of events in the future? So we can always click this blue reset button just to reset all our data. But let's say, okay, let's say Microsoft goes to 457, and let's say it does that by next Friday. And do we want to say that implied volatility goes up, goes down, stays the same? Maybe it goes up a little bit. Maybe we get, I don't know, a 5% implied volatility percent change, right? We can see, all right, if that happens, we actually, on this date, it's giving us 3 dates here. The blue is today. The turquoise is what happens at expiration. And then the orange line is a hypothetical date that we want to evaluate. So here I'm evaluating July 5th when the 19th is our expiration. Recall that when we buy a call, it's a super bullish trade. So what we're seeing here is the time decay is working against us a little bit. Our intrinsic break even's 462.70. That's basically just our call premium plus our strike. It's not including the commissions, so you have to factor that in yourself. You can also adjust the price if you wanted to do that. But you can see here, it's not moving fast enough for this strategy to really to play out. If we were to get 465 on Microsoft by next Friday, you can see, okay, this strategy is starting to make money now. We're getting a big move in Microsoft. But maybe if implied volatility, instead of going up, maybe it went down. So we got the price movement we wanted, but maybe volatility is compressing in terms of what the market is expecting. So if that went down, okay, we got enough of a price movement. We're actually above our intrinsic break even. And so hypothetically, we'd be up about $500 on this trade. That's not bad. Up $500 on a $700 investment or 770, that's pretty good. Conversely, what if the stock moved against us by next Friday and was at 440? Okay, well now we're down quite a bit and we've lost almost all our premium. So again, you can use this to evaluate a lot of different scenarios so you have confidence ahead of time in terms of what you could expect under different scenarios for different option trades.
I think that most important column, the most important part of this particular tool is that theoretical price column that you were showing everyone right there. That shows theoretically what the option would be worth, and everything else feeds from that. So if price were to drop, time were to go by, this option should theoretically be worth about $1.04. Now it could be trading at a dollar by $1.10. That's might be what the midpoint is, but this can give you a good rough estimate on where that option will be valued. Now that said, we have just another minute. I want to give about a minute's worth of time to the strategy ideas tool as we then wrap up the session for today. So that said, I pulled up the strategy ideas tool right here. I'm looking at SPY, and what this will do is this will allow you to back test cover call or cash back put strategies. So we have an at the money, a near the money, and an out the money option. This is of course based on delta-ness for moneyness, whether it's a 50 delta, 30 delta, 15 delta, or at, near, and out of the money and such. And back tests over the last 2 years that if I'd been selling a cover call 30 days out, 60 days out, or 180 days out at a time. And while this, for example, shows a very respectable 12% return if you've been doing this in SPY, if you just simply held the shares of stock, you'd have made a 19.6% return. And many symbols it's going to show this. because, for example, cover calls make sense in a neutral to bullish environment. If you are bullish, cover calls don't make sense. You're better off simply owning shares of stock. And for the last 18 months, the market's been pretty bullish. I know at the end of 2022, when the market had kind of taken a dive, a lot of this actually showed that maybe cover calls had slightly outperformed. Because yes, cover calls will outperform owning shares of stock in a bearish market, but you know what performed even better? If you'd sold your shares of stock. And so if you had that expectation, you thought it was going to go down, it make more sense to sell your position. That said, this can also do custom back tests with this, where you can customize and go, what about the last 5 years versus the last 2 years? I remember doing this in 2022, the last 5 years, and this then showed that cover calls would have made close to 6.5 to 7%, which is pretty respectable. But if you just held shares of SPY, 9% on there, it's going to lag the market because you're giving up the upside, but you still have full downside exposure. I even remember back in 2020 using this tool to look at Apple, and if you'd been doing cover calls on Apple, your $100,000 would be worth about $95,000. Or if you just had shares of stock, it'd be worth $220,000, because you get all the downside, but not all of the upsides. Let me shift over to NVIDIA. A little more volatile security, respectable 78% annual return on a cover call strategy, but just owning the shares of stock, 170% a year. So we'll click on view historical details with this. And this will show you, see, when it shot up right here, sold off the upside. You didn't get the upside. Sold off the upside here, but when it dropped, you get all the downside of this. So this is why this will underperform and such, that the premium, if the premium is worth giving up the upside, well, the trade makes sense. But you then also have to factor in that downside there. That said, that was a quick 2-minute hit on the session on the particular tool. I want to thank everyone for joining us, for spending time with us this week, for giving us an hour of your time today, giving us a lot of your time last week and such. We did have a quick question on, can you chart implied volatility? Yes, under the charting tool. You pull up charts, you add indicators. There's an IV or historic and implied. You can then chart, where implied IV30 has been, and you can then draw some horizontal lines on that particular chart to get that taken care of. I don't think it offers IV percentile, but you can take a look at IV30, 60, 90, HVs and such to pull that up there with that. That said, thank you for joining us, everyone. Hopefully this was a valuable use of your time, a good investment of your time, and we would love to see you back in future sessions. Take care.